To evoke a sense of urgency, we often say the banking sector is 5 to 10 years ahead of insurance when it comes to deploying new tech at scale. Especially in the bancassurance channel, insurance carriers have the opportunity to close the gap. Think of opportunities to leverage the extremely high contract frequency that banks have with their clients through mobile banking apps. Or leveraging customer data of banks to create targeted products for customers. Of course, this requires shifting to a higher gear as well. What do insurers have to do to stay relevant for banks? What new added value should insurers offer to banks to prevent that they become invisible and interchangeable? Simon Schneider, the founding partner of Neotech Ventures, is the host in this talk show about Bancassurance 2.0, how to thrive in an era of digital disruption.
Good afternoon, everyone. Great to see you all here. The next 30 minutes we will talk about bancassurance. Before we start with that, I would like to say thank you to the ITC Europe and the DIA team for this amazing conference. I really like to be here. I think I can speak for all of us that it is a perfect audience they have created for this great event. And now let's go into the discussion. Bancassurance, of course, is a really interesting topic if you look at it, how it has developed over the last years. Volker, I would like to start with you. You are head of digital and sales and partnerships at AXA in Germany. And I mean, how does bancassurance fit into your daily business?
Absolutely. So first of all, great to be here, and thanks for the great interest on the afternoon in this kind of topic. At AXA in Germany, we have indeed the digital sales consolidated, direct and indirect sales, and how does now bancassurance fit in? So first of all, I think it's important to note that direct sales is really an important growth contributor for AXA also in Germany. And I say this because we do not have a dedicated brand. We use the AXA brand, but we have dedicated online products, and that's really, especially in P&C, an important growth driver. However, not all digital potential out there is accessible through direct channels. I mean, if I ask how many people of you wake up in the morning and actively think about insurance and purchasing insurance, then maybe we'll have a bias here because we are all from the industry, so a lot of us will wake up with that kind of idea, but most customers don't. So that means the limitation of the direct channel is to really access people which are not actively searching. And this is where partnerships and bancassurance comes in, because this is a way to address also the other part of the digital potential of people that are not actively shopping around for insurance, but come across certain life events or points where they might need protection. And so that's the reason why we are managing that from a combined perspective.
I mean, we already talk about this since a few years. I mean, lots of buzzwords around bancassurance. Perhaps we try again to really talk about the real potential of digital sales through banks. I mean, for you, it is crucial to get that done, so we would be happy to learn more about how you do it.
Yeah, this topic of digital bancassurance is around since quite a few years. So I remember when I was first here at DIA, like 2018, 17 or something like that, it was already a topic. But also to be really candid, not a lot did really disrupt or change in this kind of field. And what are the reasons for that? And as often, I think it's a combination that some things have been underestimated and others have been overestimated. So what I think, to start with the good part, what has been maybe underestimated is the unit economics of digital bancassurance. So out of the partnerships that we have in that space, we clearly see really attractive unit economics. What do I mean with that? It's like 4 things that are very special about digital bancassurance that you cannot really replicate in another channel. It's first the fact that banks have a super high interaction frequency with the customer, so they come across a lot of points in the life where the customer needs protection and they are present. The second thing is that typically the data the bank has at that kind of point can be used to really reduce the number of questions asked. So that means if I take the interaction frequency, this kind of reduces my custom acquisition costs. Because I mean, a bank doesn't have customer acquisition costs at that point; they just have opportunity costs. And the second thing with the bank data, using the bank data, increases the conversion because every question that I can leave away has a higher conversion. The third element is maybe not so obvious. When you take people that are not so actively looking, and then you have fewer questions, you typically have a different segment of customers which have a very good risk often and also higher loyalty, because you're not so much addressing these 20% around which are actively waking up and searching and shopping and optimizing all the day, but you have another segment. And then the fourth element is more relevant for the bank, which is that at the end, in digital bancassurance, the bank builds the machine once and then it can scale. So it's almost like unit costs marginal costs of zero when you scale the whole thing up, and that makes it quite interesting. So I think that is more underestimated, because if it was overestimated, a lot of banks would go into that kind of direction. Now, what is overestimated? It's clearly the scale. And I think a lot of banks thought that this will scale quicker a few years ago. And the reason why it didn't scale so quickly, I think, is also quite easy. These use cases which we just discussed, they all need work to really address them, and to build scale in different use cases requires time. So what do I mean with it? Whether you integrate into a lending journey, or whether you have a switching approach with people that already have a contract at a competitor and you want to switch them, or you have a live event when somebody changes the address and you offer them a household insurance. All these kind of use cases are different in terms of the journeys you build. So we also switched from an approach to really do one thing at a time. And for example, if I can say that, the cooperation we have, for example, in Germany with the direct and digital bank ING, we also switched to an approach which is really scaling one use case, and then when everything is optimized, going to the next one, and then doing that time by time. So I think the scale will take a bit of time, but it will just get through.
If I listen to you, I get the impression we are talking about embedded insurance. So where's the difference? And what can bancassurance especially learn from other form of partnerships?
Absolutely. I would even say it's kind of embedded insurance at scale. So that at scale, why at scale? Because we are talking typically about products which have, a higher premium than the little annex products that you have in embedded models, and also a longer duration. So what can bancassurance learn? I think two things. From the classical embedded insurance models, where you have like these little annex products which were just integrated somewhere else, bancassurance can learn the approach which I just mentioned, which is to be present at a point of need, use the data, and make a super simple journey to just get the sale. But I think that also bancassurance can learn from other forms of partnerships. So when I compare also what we do with other partners here at AXA in Germany, we have, for example, a cooperation with the biggest online portal for used car sales, where we take the lead from an online journey, and then via Salesforce put it into a phone-based advisory, which is interestingly also giving us not only a high conversion, but also a way to have a bit more a holistic approach in advising customers. And that is something which is not really discussed so far in digital bancassurance, to really have a bit more an omni-channel approach as well. So these, I would say, are the two things that can be learned.
Okay, last question for you. You are already a long-time member here of the DIA community. I think 5 years ago, first time on stage. How did the role of insurtechs, especially in this bancassurance topic, have changed over the time?
I think there are two really main changes. The first one is that when I was here for the first time, like 5 years ago or so, the concept of customer acquisition costs was not really discussed so much. So there were a lot of insurtechs also outside the bank insurance space, which thought it super easy to collect customers, and then found out that this is not so easy with these people waking up and actively looking for insurance. And at that time, I would say there was a vacuum of bank insurance startups going more into that field. On the bank insurance side, I would say there was a main change from broker models, which were very present at that time. So where you go to banks and say, the proposition I offer is people can manage insurance. Which is like a bit the 20% proposition of people which actively wake up in the morning and want to manage that. So they almost all stopped their business or don't do that anymore in that case. And we see now a much more broader range of insurtechs which are using different elements of the value chain in bank insurance. So for example, PSD2 is a big topic where we have a lot of companies which are using or making bank data accessible also for other industry players. And so I would say it's much broader now and focused and scattered along the value chain. There was not this one disruptor which just kind of cracked digital bank insurance.
Thank you very much. Andrea, you are a real CEO of Net Insurance from Italy. Let's start with an easy question. What is bank insurance for you, and why are we sitting here to discuss with this topic?
I think that to answer this apparently easy question, I have to use two different perspectives. From a backward-looking one, bank insurance is essentially the most of my professional life, 30 years of general manager and the CEO of essentially bank insurance business. I realized that is at least partially different profession and activity from being a pure insurance, because the relationship with the partner so big, so huge, so important like a bank really shapes the value chain and the activity of the insurer when becomes bank insurer. Then I dedicated to bank insurance my first book, so bank insurance is really a big part of my past. But it's also part of present and future, so a forward-looking perspective. Because the core of distribution strategy, but I would say the overall strategy of net insurance is shaped by bank insurance. We strongly believe, and for the moment the numbers are with us, that bank insurance is probably the main driver to increase the protection, to close the protection gap, to increase the protection usage in a market like Italy, but I think that at least in Europe we could enlarge this absorption. So it's a way to close the protection gap, in particular in the digital era. And this is for the reason the strategy of the present or the future of net insurance is mostly, if not all, shaped by a bank insurance choice of distribution channel, and the value chain that we have built in terms of product, processes, people, culture of people is shaped by being a bank insurer. So I think these are good reasons to be.
Okay, so let's try to get that a little bit more concrete. So what kind of products can you offer to your customers in a better way because you integrate bank insurance elements? Can you describe that a little bit?
I think that all the protection product, meaning per protection, everything is not life savings, it is not motor, can be offered in a better way for certain kind of customers, because maybe bancassurance is not for everybody, it's not for more sophisticated customers, it's not for customers which need wider protection, which are already well educated to insurance, but is for the most of people, is the easiest, is the most flexible, is the most touchable and reachable way to use this kind of product. So it's health, just to answer your question, it's life, in particular in terms of life, is also pet, something more niche products, travel, and all the products that can be part of a proper use of protection. In particular, marrying the multi-channel approach, the omni-channel approach that in the digital area, so not only physical branch, which remain absolutely key and pivotal in any case, and will remain also in the future, but also through the other channels of the bank, app, website, on banking, and so on, managed in a very integrated way.
Okay, that means also Bancassurance has some impact into your digitalization strategy, is that correct?
I think that digitalization is what is transforming and partially has already transformed bank insurance from a purely high-touch business to a business high-tech. High-touch plus high-tech is something which is now possible thanks to the digitalization. What means in concrete digitalization? I usually say that means that behind the bank seller, the salesman of the bank, the consultant of the bank, everything when he gives turn back to himself must be digitalized. So from the communication to the customer, from the issue of the policy, in the way that he can be concentrating in what? The high-valued activity of education of the customer, consultancy of the customer, and pushing the sale, which must be considered also in this activity. And this is one of the reasons for which bank insurance can be very effective, and in this moment is still much more effective in terms of volume and business development from, for example, compared to embedded insurance, which in any case very promising, but the physical difference, the physical touch in this moment is still making the difference. So digitalization adds to bank insurance without subtracting, making this model really complete and really consistent for a wider set of customers, which is the most of the population from my point of view.
Really interesting insights. You mentioned embedded insurance. So once again, my question for you, how do you differentiate bancassurance from embedded insurance?
There are several points of contact. I usually say that embedded insurance is the modern word of bundling. Bundling is a great part, for example, in credit protection of bank insurance, but it's still different. So I stay to the different, for the sake of time, to the difference. I think that the main difference, which is an advantage of embedded insurance, is that embedded insurance is more event-driven and contextual to the insurance needs. Banks have a wide customer base, have a strong relationship, but their act of sales most of the time is not contextual. When it is contextual, like in the credit protection, which is the most similar to embedded insurance, is in fact much more effective. So I think that embedded insurance in the development, in the medium term, can have a strong competitive advantage, which banks can try to replicate, but not completely, and not for all the line of business and for all the kind of the product. Event-driven and contextuality makes a difference for embedded insurance.
Thank you very much for that. So, Joseph, I would like to include you now into our round. You are the Chief Customer Experience Officer of NN Group. So, I guess happy customers is really important for you. Tell us a little bit more, how do you use bancassurance in your daily business?
First of all, thanks for having me and the interest of the audience. We are a prominent player in the European bancassurance environment. So actually, we are a big part of the distribution we do is through bancassurance, mostly in protection and savings products. This comes from the time that the company was originally the same company, the ING Bank, and after that, we have developed the business. So definitely, bancassurance is an intrinsic part of our business model.
And what are the key success factors for you?
It's curious, you were mentioning before the terms embedded insurance, which seems to be the buzzword of the moment in insurance, clearly. I would say that bancassurance is kind of an evolved form of embedded insurance. No? Actually, you look at the key success factors and how to play properly embedded insurance, it really translates very well into bancassurance. So first of all, it's about building a symbiotic relationship with the bank. And in order to do so, you have to be a partner. No? You have to build the product together. You have to build a customer experience that is actually part of the customer experience of the partner, of the bank. And then you have to be very good in terms of exploiting data and helping your partner to really tackle, exploit all those databases of clients with the products you have developed. So actually what you have to do, well, in embedded insurance, in an evolved form of bancassurance, that you have to do the same thing. So I will summarize it on those 3 points.
Thank you. Often when you discuss bancassurance with people from the industry, they mention especially the Spanish market as a very successful market for bancassurance. Can you give us some insights on this, and why is the Spanish market so successful?
Well, I like to believe that it's because the players in this market are doing it very well, which is partially a reason, but not the only one, unfortunately. And this is just a theory, but I think it explains very well the context of the market. After the financial bubble, so there was a real estate bubble here in Spain at the same time that the 2008 crisis played. Banks have a very well developed structure of branches in the whole country, and they were doing good business with everything related with mortgages. At a certain point, that bubble burst, as we already know, or everybody knows, and banks need a new form of finding profits. So they had the branches, they have the know-how on how to react to a certain type of customers, and they started developing that business. So with that, they have been able to translate a need into an opportunity, so a potential crisis into an opportunity. And I have to say that those companies that were in well positioned in order to support them in building this, we were there in order to build a successful business. That actually has become I would say, this most developed market in the world for bancassurance. And well, that's a little bit the story, no? Just to give you an idea of how big this is, the first bank in this country is making 40% of its profits coming out of insurance. So it's actually half of a bank, half of an insurance company. If you want to be in certain product lines in this country, you really need to be a good player in bank insurance.
Is it fair to say that the banks were forced into these partnerships?
No, not really. Not really. I think the most clever banks have been able to build a successful relationship with the insurance company in order to do so, because they did not have the core competencies in order to build it. So the ones that have been more successful are the ones that understood that and have been able to build those partnerships.
Yeah, but impressive numbers. Thank you for these insights. So, John, so far we heard the guys from the insurance industry. I think it's time to include you now into the discussion. You are general partner at MSAD Ventures. So, my question to you is, as an investor, how do you view on this topic of bancassurance? Yeah? Is it an investment space for you? And if so, why?
Yes, well, thank you. I'm happy to be here. This has actually been something we've been investing in for a long time. I think the names change, the technology changes, but the trend has been in place, in my view, for a long time. So where we generally start is if you think about the customer needs, and let me start with a small business, for example. Small business has banking. They may or may not have a credit card depending on their size and whether they qualify. They might struggle with financing for their supply chain, or maybe it's for inventory or things like that. They need their insurance. Their insurance might vary depending on what type of business they are. But at the end of the day, if you're running a small business, you need all of these services. And historically, you've gotten them from multiple different places. And what's the reason for that? And I think a lot of the reason for that is just historically how these industries have developed, and not really because of the customer need. So what we're seeing now, especially in the last, call it 4 to 5 years, is because people are much better at collecting and understanding data, they're way better able to integrate these services. So we're talking about embedded insurance. To me, what embedded insurance is actually understanding a customer need and applying the insurance at the time that they need it with some context, and maybe you even tailor that insurance offering to what they need. So we're investing a lot in this, actually. You could call it neobanks, challenger banks, alternative finance, multiple different places. But at the end of the day, one of our core theses is that all of these pieces come together because that's what the customers need and that's what they want.
I know you have a really amazing portfolio, so would be great if you could tell us some examples where you have invested in the area of bancassurance.
So we're a global investor. We do have a big portfolio. We've got almost 100 companies in our portfolio now. So I'll give you a couple of examples, and again, I'll probably the easiest way to understand it is probably in the SME space. So in the UK, we invested in a challenger bank called Tide. And what they did best was they were trying to focus on enabling really easy accounting solutions for these small businesses. That data applies very easily to understanding the exact health of that business and underwriting an insurance policy. So a bank assurance product there was a real natural extension, and it's something we're working on in India. Volker mentioned the used car sales. We have a company in Singapore called Caro that is very similar. They're doing the financing, the sales, the insurance, all of it is bundled together. And again, you're meeting the customer's needs. We have a company in Mexico City called Capital that is starting with the financing. The biggest challenge there tends to be either inventory finance, supply chain finance, and these companies can't really scale often because they're not able to get the working capital that they need to grow as fast as they possibly could. And so the company is starting there and then using that data to provide credit card services, to provide, again, to go through all of these different steps. In my world, the insurance often comes last. So what we're seeing is, I think, this evolution, and the embedded insurance to me is the next step of kind of meeting these customer journeys. I'll give you another example in Germany, and you know this company well because we've co-invested. A company called Mojo that is doing a platform for temporary workers, for gig economy workers. Freelancers is, I guess, they've changed the terms, but, and you can think again about these people have specific needs for their insurance. They have potentially needs to have their invoices financed. Even just writing an invoice could be a pain for somebody who doesn't normally do that. So there's, again, on the personal side, these needs are there as well, although you could even think of these as small businesses. So I think if you generalize this, when you think about the financial needs of a specific group or a type of company or a type of person or a customer-specific case like buying a car, putting those pieces together is actually a real high value add for those customers. And so to me, bank assurance is one of the aspects of it, and probably one of the most powerful because the banks have such a common, usually a daily interaction on a transactional basis with their customers.
Yes, I agree. Especially the easy access to these products is something which is really important for such customers. It's amazing to hear where you are investing all over the planet, so you must have really a strong network. Yeah, great to hear that. From your point of view, what are the challenges in the area of bancassurance, especially when startups are involved?
I think there's always growing pains. Startups have to get to a certain amount of scale before they're capable often of working with especially bigger players. So we often invest, for example, at seed or Series A, and we don't expect those companies to work with incumbents till they're maybe Series B or C sometimes even later. I think even the path of bringing on products, and when you think about these roadmaps, that's a challenge. You're often talking about different regulatory regimes. When you talk about banking and you talk about insurance, you have compliance, you have data, security issues that you have to deal with. It's pretty hard. So none of this stuff is easy to do, and it always takes a lot of time. So to me, we're talking about embedded insurance. I think we'll be talking about that for a little while. My gut feeling is we start talking about tailored insurance as the next iteration, when you start using that data in context in real time and customizing products a little bit towards that customer, which is a natural evolution of just putting pieces together.
Okay, last question. You work with a lot of startups. So how do you see their role in between banks and insurance companies? Where can they help? Where can they speed up things?
I think there's multiple different places. It's a pretty complicated question, actually. I think there's some where there's infrastructure that can help. Often incumbents have older infrastructure, and so putting APIs and things together can be helpful. I think sometimes the product innovation is a little bit easier for a new startup to work on, and then again to partner with somebody who has the capital or the capabilities to push it farther. I think to a certain extent, the startups are better able to even cross over on these multiple product lines. So I think there's ways that works. We're finding though, the startups usually can't scale to the same level that they would like to without help from big partners. So we do see that synergy works, whether it's on the banking side, you need the capital for the finance. On the insurance side, you need the capacity, and you need the licensing, and you need the reach. So there's a real good synergy here between all these parties, and I think it's going to be a powerful trend for a long time, I think.
Yeah, I agree. So thank you very much to all of you for these really great insights. Thank you for listening, and we are out. I would